Good morning, trading world. It is May 10th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. Yesterday, the market went right to the edge and looked down and said, my, what a drop that is. The market edge or cliff, as I've called it, is 397. Now, the question we want to answer this week is short covering or dip buyers. Will the short covering wake up the dip buyers? We see technical signs of a bounce trying to come together, but as I said before, it will be a big difference bouncing from where we are now or bouncing from 5 to 6% below here. I personally think we have capitulated, or we haven't capitulated enough to call this a short-term bottom yet. And a short-term bottom will only be consolidation on the daily and weekly chart time frames. Let's get to key levels of the day. Here we are with the key levels of the day, starting on the resistance side. We have the jack resistance at 402 to the 403 area, queen resistance at 404 to the 405 area, and then king resistance all the way up at 407 to the 414 area. On the support side, we have jack support at 400 to 398 area. Then we have queen support at 397 to the 395 area, and then king support at 394 to the 388 area. There were a few remarks that I said in yesterday's pre-market that still hold true. If we break the 394 area, we could very well test the bottom of the channel. The current channel we are in is 416 down to 397. Now the next major channel down is going to be 397 all the way down to 379. The thesis for today. The main thesis is bullish, closing above 398.17 with a projected target high of between 402 and 408. The alternate thesis is bearish, closing below 398.17 with a projected low of 398 down to 388. Give me just a second while I bring up the scenarios of the day. All right, our first scenario and most probable scenario is going to be our expansive range day structure. We could look to set a decision area higher boundary around the jack or queen resistance area before dropping and testing the previous close and breaking through it and setting lows up for the day before bouncing again and coming back above the previous close, just kind of giving us kind of that V bottom at some point today. Okay, sorry about that. I had to correct the actual expansive range day structure text. But again, the most probable scenario is going to be the expansive range day structure where we could look to set a decision area high boundary around the jack or queen resistance area before falling lower, possibly giving us a temporary V bottom, and then visit back to the middle of the range. So that's the first scenario. Let me bring up the second scenario. All right, scenario number 2 is our rounded reversal day type structure. we could get a continued push lower toward the queen or king support area and find midday chop around either the queen or king of support area. And actually, what's more likely to happen at some point this week, not sure if it's today, but you'll notice the common theme is that we're going to get a sharp V bottom. Whether we hit that 394, 388 area, somewhere down there, we're going to get a sharp V bottom that's going to trigger the actual bounce. And we'll do that. And then we'll, if this is a rounded reversal day, that same energy that we spent going down, we're going to see coming back up the second half of the day, giving us that sharp V bottom. That's scenario number 2, our rounded reversal day type structure. All right, now our final and least likely scenario is a trend day up structure. We open gap up and start with a fade back toward the previous close. We find support on or before that previous close, then begin the uptrend for the morning. We find midday chop around either the possible queen or king resistance. And a lot of times on a trend up day, we usually close the day with a fade coming back in. So those are the 3 different scenarios that I'll be looking for to play out today. The expansive range day and rounded reversal day pretty much have an even probability to happening today, and the trend day up is not far behind. But at some point, it is highly likely that we get a very sharp V bottom when we do start to bounce. It's going to be impossible to peg or catch that actual bottom because it's going to start and we're not going back. And that's going to be the start of this temporary bottom. But in order for that to happen, we have to see some panic selling, some capitulation going on where things kind of feel out of control and not just this orderly, sloped, algorithmic down trot that we've been doing. So it's going to have to get crazy. We're going to have to get below that 397 area in order for that to happen. So until then, it is best that you know and be comfortable and understand the risk that you have on in your positions right now. And the reason we call it risk, or the reason you risk amount A to make amount B, is because that's just it. You're risking that amount. This is what you're putting up and you could possibly lose. And the more you look at things from that way, the better your trading will be. So, as always, wishing you a positive trading day. Hope this helps. Have a great day.